All right, so welcome back to the TRADEPRO Academy Podcast, everyone. And it is my pleasure to have one of our homegrown players here from TRADEPRO Academy with us today that's going to be partaking in an interview. I want to start off a new series. We'll kick off a new series here with Mike from TRADEPRO Academy, where we're going to interview a lot of our members, ideally 1 to 2 on a month-to-month basis here at the Mind Over Markets podcast to get a better understanding of not only their journey in trading, also kind of taking what they've learned in the basics and the groundwork at TRADEPRO Academy and developing something of their own. One of the main topics that I do want to talk about today is creating your own trade style, right? Creating your own trade style to break down and understand your success as a trader. I think trading and trade styles are very personal. And even though you may have all the tools, I'm a firm believer that you have to add a little twist to it to kind of make it your own. So that's going to be the main topic of conversation today. I want to first introduce Mike. Here we've got Mike on this interview from TRADEPRO Academy. So say hi to everyone that might be listening.
Hello, listeners.
Hey. So Mike, I just wanted to start off like every interview realistically. Give us a little bit of background about yourself. It doesn't have to be too crazy, right? I want to mainly know about your trading journey and kind of where you started and what you've gone through so far. Because you've been at TRADEPRO Academy for a pretty long time. We've even worked together one-on-one at some point. But just from the very, very beginning, from the start of your trading and your trading journey, just give us a little more background about that so we know we're listening to you.
Sure. So, I am give you a little background about me, 2 sentences. I'm based out of New York, just outside of New York City. I've been trading for about, let's say 5 years, since, right before the pandemic. I've gone through lots of, I always say I went through all the courses. I went through a number of mentors, but I was never able to be consistently profitable until I ended up at TRADEPRO Academy. And yes, we did have that one-on-one session, a few years back. But I started in the actual stock world. I was buying shares, selling shares. But ultimately I didn't like the fact that you had to have so much capital in order to get so little gain per trade.
Yep.
So obviously I was naturally, drawn to the options market. And I actually find the options market super interesting. There's so many cool things you could do with the options market. Yeah. But when it comes to directional plays, the option market is just very difficult to do simple things like place stops. So for instance, like if I want to get out at like a low, I don't know what that equates to on a call price. Yeah. So that's when I was really looking for, Delta One strategies, and I actually stumbled upon the futures market. And when I got into the futures market, I stumbled upon a TRADEPRO Academy video on YouTube, and was quickly drawn to your strategy with auction market theory. And I still use auction market theory. That's the basis of what I use today. We went on a one-on-one journey for 12 weeks, whatever it was, 2.5 years ago. And I learned a lot about order flow. I learned a lot about auction market theory. I'm in a place where I'm starting to phase out the order flow because it wasn't working for me as much. But, still the basis of what I do every day is based on the original principles of TRADEPRO Academy with auction market theory.
I like that. That's one of the things that you said. We actually recently, by the time this comes out, we probably released that video by then. But one of the things that you said was like a huge topic of conversation, actually, order flow. Right, order flow in it. I think over the last few years, especially seeing a lot of other seasoned traders in the world kind of start leaving it behind. I kind of want to I feel like there's going to be a lot of points of conversation, so we might be all over the place today. But I don't want to leave behind that thought of order flow. So what was it for you? Because I know that at the beginning, TRADEPRO Academy was super super into order flow. Everything was kind of order flow based, and I think that there's good and bad around that. I think it's a fairly complex tool, but I want to get a better understanding of what you thought was kind of holding you back with order flow. So you're kind of leaving it alone now.
Sure. So let's say I've been at TRADEPRO Academy for about 2.5 years. The first year and a half, it was all, focused on, I'd find my levels through, distributions and auctions. But the entry was 100% based off of order flow,
Yeah.
using the DOM. And, let's say the first 6 months was me actually learning, like, the patterns on the DOM.
Yeah.
And then around that 7, 8 month mark, I started to get like more comfortable with, finding where to enter and, how, when to get out based off of order flow. But somewhere in like the last 6 months, maybe a year, I found that order flow has been more triggering me into getting into more impulse trades and being faked out a little bit more. Order flow can say like, hey, this level at, let's say 70 has really strong buying. And, a year and a half ago, that would have been like my entry signal to go long.
Yeah.
But, it sometimes feels like, okay, we see the 70 go up to 73 and then drop down to 65 and then right up to 73 again.
Yeah.
So I felt like I was just getting faked out too much. So in order to, trade less, I widened my stops a little bit, made my position size a little bit smaller, and, just trade off the levels with, some price action, maybe determining how I enter or where I enter.
Yeah, I think that's like very interesting and true, because you said like about half a year ago, let's round it to like a half a year to like a year timeline, where order flow seems to have like faked you in and out of moves a lot. I think like that's a huge concept that I've been talking about with a lot of people as well, where it seems like the effectiveness of like these like traders that come in aggressive buying or selling, whatever it is, like it's not as real anymore. It doesn't seem as real. And this is something that you're looking at on the DOM, I would assume, right? Or
Yeah.
So when it comes to the DOM, this is a huge topic of conversation I had in a prior podcast, as well as like with other people, that it seems like there's more so algo trading, kind of just like real-time spoofing, meaning like they'll throw in orders like literally at market and then see what happens. They'll pull them and then continuously like kind of recycle those to kind of get a feel as to like, okay, where are people actually about to get screwed? So it kind of just like jumps it around. I fully agree. That's why, honestly, I've kind of, not that I've moved away from the DOM, but I'm much, much more selective in the DOM, mainly into areas that I care about, just because of that same reason. Like you were saying before, let's say a year ago, you see like a massive buyer or people getting trapped, like it's a pretty easy entry at that point. Like you'll get like a few points. You'll get a base hit out of it, fine. Right now it's just like jump up and down, up and down, up and down, which I've kind of started combining the footprint with the DOM to kind of really zero in on like where the delta is, because the delta's, I think, a little harder to see visually on the DOM. You see like large orders, but like the difference of those orders on an immediate level by level basis, I think has a better visual component on the footprint. Like have you looked at that at all, or is it just something that you're like, you know what, like I'm mainly just gonna stick to the auction, some of the price action?
Sure. So I love the idea of the footprint. The footprint, shows you what the DOM looked like in the past.
Yeah.
And like keeps those numbers up so they don't disappear like on every trade. I just like couldn't get the footprint to work for me. I tried incorporating it. I used, real estate space on your monitors is expensive. So, you could really only see like 2 or 3, 4 maybe bars on the footprint. And I just couldn't get it to work with my strategy. But I know people that do. I'm not saying it doesn't work. It just didn't work for me. So phased it out as well.
I like when people start a sentence, I really like the idea of XYZ, that's not something you would ever look at or do. Like, yeah, I like the idea, but I get it for sure. Like I had my ups and downs with the footprint myself. Like I wasn't really much of a footprint user until like maybe, I don't know, like let's say like 6 months ago or something. And it's not like I like live and die by it, but it's more so, like you said, you get kind of a visual component real time in terms of the information that you have kind of from the past, but like that's already been traded, right? So technically it is from the past. So the reason why I like it is because it just gives me like a delta visual of like who's imbalanced, and then the DOM kind of allows me to see, okay, who's actually active. Like I do agree with you, like the order flow aspect, especially now, like people coming into the market and trying to learn order flow, it's like, oh, if you didn't learn it about a year or two ago and you're like super comfortable with it, it's going to be an uphill battle realistically. And like speaking of that and kind of your development as a trader, you've given us a little breakdown of kind of what you've learned at TradePro and like how you've taken bits and pieces that you might like versus things that you don't like. Uh, I think that realistically, it'd be interesting to understand not only from that perspective, like, okay, what have you taken? What have you not taken? Okay, you've gotten rid of order flow, but like give us like a little more of a deep dive into how you use the auctions in relation to, I guess, like what we do at TradePro. Because I know there's like a lot of similarities, but I know for a fact that based on the small conversations we've had, like in live stream chats and like whatnot, there is some kind of differentiating factor that you kind of use when it comes to profiles or just like the general strategy or your general, I guess, approach to the market. Something that like you've created that's a little more personal to you, because I know that you just said you use like a slightly wider stop, a slightly wider take profit, but are there any things that kind of differ from the general way, I say, if you want, that we look at things at TradePro, especially around like auctions?
Sure. So, my whole goal, what seems to work for me is that I try to eliminate as much noise as possible.
Yeah.
So, the first way I did that was like trying to not stare at the DOM for the first 2 hours of the open. The DOM, very useful tool, and like it still has its place, not in my particular plan anymore, but it had a lot of noise with it too.
Yeah.
Other things I've done where volume profile has a lot of noise in it too. Instead of using volume profile, I use the market profile. It's more definitive. I know exactly where the lines are supposed to be, and I don't maybe use the lines as exact numbers. I use areas versus lines, but it's much easier for me to identify where the distributions are on a market profile versus a volume profile. I don't look at the overnight session. I look at the direction of the overnight session, but I won't incorporate the time of the overnight session and the volume of the overnight session to my analysis. So the laws are still the same. The laws of auction market theory are still the same. We want to stay in balance, and if we do, I'm looking to trades to stay in balance. If we break out of balance, we look for the next balance. Like those haven't changed. It's just how I look at balance, like how I find my balances are slightly different, and how I enter trades are slightly different. So, not really looking at the DOM anymore. I still have it up, but I'm purely looking for like those like 2,000, 3,000 market orders, like just to see. I'm ignoring pretty much everything else. I still have cumulative delta on my screen, so I have a general idea of who's in charge as far as aggressive market buyers and sellers. But I'm using, the price action patterns to, actually enter onto trades. So I'm waiting for some sort of excess move to the up or downsides, and I'm looking for an entry either on the other side or with it if we retest it. And it's purely price action based, not really looking at DOM numbers to make that decision.
Interesting. So you've developed a lot actually. So when you say like market profile, are you using like individual session profiles or a combination or something that's like only cumulative? Like let's say a few days.
So in general, it's individual sessions. When I see two sessions line up almost perfectly, I'll actually merge those profiles, and then I will use that as my market profile.
Okay, pretty interesting.
Yeah. And you can see like where like generally we'll want to stay in balance in those market profile like distributions. And if we don't, there's usually a retest on the other side. So that's what I'm looking for. It's same things that TPA is looking for, just like with a slightly different point of view.
Interesting. Yeah. So it's like the auctions and whatnot, like the directionality doesn't necessarily change, but I think that you've like adapted a lot of what you have found works for you, which is like pretty much my next question. So obviously trial and error is a big thing, but like, are there aspects where you can kind of shed some light on how you found these things to work, right? Kind of what your process is in terms of your trial and error and how you developed something that's clearly very personal to you.
Yeah, I mean, like you said, it is 100% trial and error. It's
Yeah.
2.5 years of, trying this, does this work? Trying this, does this work? And if it works, does it work over, more than a day? I'm not looking at, some things you might tweak, like will work today, will not work the next, 2 months. A little bit of back testing. I'm not a huge back tester. Generally what I'll do is I'll try something new on any given day. And then, I'll try it for a couple weeks. And in general, if it seems to be helping, I'll keep it. So I'll give you an example of like something I've been trying for the past, 2-3 weeks. I stopped using limit orders.
Okay.
I no longer am waiting for price to come back to my area to get entered, because one of the things, as you know, and we'll get into eventually, is like I hate it when a trade goes without me because I did not get filled.
Yeah.
That is my number one triggering
That's
thing.
like worse than losing.
Yeah. Like if I miss the trade by 1 tick, 2 ticks, even like a point, like that is the worst thing for me, and I'll probably go on tilt the rest of the day.
Yeah.
So not that I mark it in, but I'm looking at price action, and I'm looking where if the trade is going to go in my direction, it has to get to this point first. And if it gets to this point, I want to be in. So
Okay.
I put in, buy stops and sell stops. So, if the trade gets there, that means like I'm getting more confirmation on my trade.
Yeah.
Yes, it means that like my stop has to be bigger because I'm not getting in at the best entry, but I'm getting in at a more confirmation entry. And yes, sometimes it'll get to my order, go up 1 tick, and then go right to my stop. But I think that happens less than it did before. So
yeah, I think that's a good point, like that, because a lot of people, they ask, and like I think a big question is, what is confirmation? How do you kind of define confirmation? And realistically, confirmation, the easiest way to define is like price going in your direction. So that's pretty interesting. So let's say you have like a support zone, right? Like you have an area that you like. Let's just use a super easy random number, right? Let's say like 20,000, right? NASDAQ. So like if you have an area at 20,000, you're not necessarily trying to hunt where the low might be into that area for you to bounce off of. What you're saying is like, let's say, I don't know, let's say you get a 20-point move from 20,000, so it goes 20,020, and then let's say you decide that's your like kind of entry point. So you're going to be kind of breakout trading above that area where you're just going to buy stop into that area and then allow that trade. Okay, interesting.
And then I'll put my stop right under 20,000.
Okay, exactly. So is your stop, would you say, is your stop like more malleable based on the specific trades that you take? Like it's not, I guess, concrete, if you will.
I take trades off the 1, 3, and 5 minute charts.
Okay.
So essentially, let's say we came from under 20,000, we spiked up above 20,000, and we're coming back to 20,000. I will wait for some sort of turn on the 1, 3, or 5 minute, and once that turn happens, I have my stop order above where I want price action to be, and my stop entry order, and then my stop exit order will be under where the excess was.
Okay, interesting. That is that I would say that's like a very different approach from generally what we do at TradePro. Generally what I do, I would say, because I kind of just enter based on like if I have a support zone, I'm just kind of waiting to see if someone comes in aggressively and creates an imbalance so I could enter with them, whether that's below that area. And sometimes, like especially yesterday, and this is like a common occurrence for me, that I'll realize, okay, like if there's no one actually supporting the area and it drops below, the best thing to do, which pretty much is the way that you're looking at things, is just wait for prices to like rip back above so that you have confirmation that that's actually coming into your direction. So you're not playing this stupid little game of like trying to find a bottom when there might not be a bottom.
100%.
Which like I think that like came out of something that we talk a lot about. We joke a lot about this in the room, because I get missed on fills like a lot, and like
have you heard of MSA?
I feel like you just got tired of getting missed on fills, so you changed something about it.
Yeah,
and you did something about it, but not for me. So Mike jokes around. He jokes around about MSA. MSA, he'll tell you a lot about it, but it's it's kind of an inside joke at TPA. Whenever I miss a fill, he just pops up into the chat. He's like, "Have you heard of MSA?" And I'm like, "Holy fuck!" Like I'm gonna throw the computer out the window. But tell us what MSA means.
Let me preach. So what is MSA? MSA exactly what you said. I got tired of missing entries by 1 tick, 2 ticks, whatever it may be, or even worse, I got tired of getting entered with only 1 of 10 of my contracts.
That's my biggest issue. I'm like third filled or like quarter filled, and I'm like,
and obviously, the one you get filled with, only 1 out of 10 of your contracts, that's going to go 100 points in your direction. And then, every stop is going to be a full size stop because you got filled on every single one of those contracts. And those were the types of things that triggered me, and I couldn't do that anymore. So MSA originally it came out in phases. MSA was all in or no in. When I was still using limit orders, rather than spread out my limit orders over a price, I would just average out where that price was. So let's say we were talking on 20,000, where you would maybe put a limit at 20,000, 95, 90, 85. I would just put it all at 90. Whatever was in the middle. And if I got filled, I got filled. And then it's fill all or fill none. That was where MSA started. And there's definitely different degrees of MSA where there was a targeting system, like 1 target only. Trading is hard enough as it is. So I was trying to focus on 1 skill at a time, where finding a good entry was that skill, and not worrying about where my targets are was another skill that I would put off till later. So like, for instance, when we were trading ES back in the day, it was 3-point stop, 6-point target. That was MSA. All, fill none. It has evolved since then. It's still fill all, fill none, but I'm not waiting for the price action to get to me anymore.
Yeah, fair enough. So you're just like, if it's going in your direction, you're getting in. Now, like it's an approach, like the way that you're kind of changing your approaches and your, I guess, like the style that you trade / like strategy is very similar to a lot of people that I've seen that trade purely on like auction theory. A lot of them just like mainly on market profiles. So I think that's it's a very interesting approach, because in theory, it might seem like you might be taking a little more risk, right? Like in a sense, because you might have like wider stops, but also you have like bigger expectations. And I'd assume that you're mainly just trading like the biggest areas. So you're kind of looking for the biggest potential trades that have like the largest swings around those like key balance areas. So like, for example, how many trades would you say on average on a day-to-day basis do you take, you think?
So one of the things I mentioned before, I tried to get rid of as much noise as possible, right? And part of that noise is taking too many trades. Trying any given level 3 to 5 times was a normal thing for me a year and a half ago. And like ending the day with like 10 to 15 trades. And ultimately, between commissions and whatever, like it just wasn't super profitable. So now I'm, my max is probably like 5 trades a day. And like most days I'll end with 2 or 3. So, and to your point about taking on more risk, not really, because, with widening my stop, I lowered my position size. So let's say I did 10 contracts before. If I have a double the size stop, I'm only doing 5. So like my risk per trade is the same. My stress per trade is much lower.
Like you're getting on the side of momentum, and like I have thought about that as well myself. Like there are situations where I'll do that, but I feel like the way that I approach it is more so if I'm thinking about it from like a swing perspective. So like if I'm planning to hold this trade for like maybe I guess it's not really a swing if you hold it only for a day, but like let's say like the entirety of the day / like the overnight plus like whatever else happens throughout the next day, then I'll kind of be looser with my entries. But like I find like I have better entries that way when I actually wait for momentum to go in my direction.
Yes.
So like that's the malleability about it. Are you trying to pick out like a bottom, or are you trying to like get on the side of momentum? Now, I think it's one of the biggest questions that has come up like throughout us chatting here is it seems like you've tried a lot of things and you've kind of um, looked for different things that work for you and things that like more of a trial and error approach. But it seems like there's been a lot of it. And I know that you've been trading very well for the past, like, I don't even know, like you can obviously tell us, but over at least the past year, I've seen like a lot of progress and you've had some crazy days. And I want to understand, how does all this trial and error and trying to, it's not like you're jumping from like, oh, let's not get it twisted. You're not jumping from strategy to strategy. You're tweaking parts of the strategy that you might find more effective than others, but it's still slight changes that are very interesting to me. So I want to understand a little more how you can change aspects to your style and still maintain consistency.
Sure. So yeah, like you said, I'm not changing the strategy. I am still trading auction market theory, and those are the principles of the strategy that I am using. What I'm changing is the entry, the targeting, and the trade management. So like I said, used to be limit orders trying to pick a bottom. I got tired of getting stopped out at the bottom tick, and I figured wait for the price to go in my direction before I continue, before I take the trade. And like even today, like I put in orders to enter on oil 3 times, but they didn't get hit because the price never went into my direction. So normally that would have been 3 stops for me. But because I now put I changed my way of entering. That's 3 trades I didn't take because I never got the confirmation. So it's not changing the strategy, but like trade management and how you enter and how you configure your stop and how much risk you're taking is not your trading strategy. That's part of your trading plan. So I've modified and tweaked my trading plan, every few months, if I see something is not working, especially like things worked for a year and a half, using the DOM 3-point stop, always 3 points, always 6-point T1. That was working for a long time for me. But then I realized over a couple of months that it stopped working for me. And I needed to adapt something. So, you try different things to adapt and see what works.
Yeah, I 100% agree with you. Like there are changes that you need to make as a trader, and I don't think that they come from strategy hopping. I think it more so comes from I guess, the execution aspect. You as a trader, the execution, the trade management, which I think like a lot of people don't fully understand that, right? Like you said, 3-point stops were working for a pretty long time, but then there came a point where the market conditions started to shift and change. And it became a little choppier, a little more volatile, whatever the case was. And those specific scenarios may not have worked unless you're actually picking tops and bottoms, which is a harder thing to do. So like you said about your oil trading today, like you avoided 3 stops because you're trying to trade based on the momentum confirmation. So maybe something like that might work for a lot of people in these certain market conditions and these environments, because you're actually getting that confirmation instead of seeing like 1,000 rotations into a low just to stop you out. And then you're like, well, shit, like I could have maybe done something about that. So I think it's a very important factor that I'm glad you mentioned. It's not like you don't necessarily have to tweak the actual system and what it is that you're trading. I think that people get very absorbed in that, and then they start just like shiny ball syndrome, like, oh, let me start using this, let me start using that, and then just start getting completely away from like the core aspect of it. When if they just change a little about their execution style, it'll make a world of difference. And like obviously you've seen your trades, like you probably go over them, you review them. Is it more of a journaling process that helps you pinpoint these, I guess, inadequacies in the way that you're executing, or is it something else? Do you just see it on a day-to-day basis and think, okay, like today I think I have to change something, let me go and review it? Or is it something that you're seeing throughout journaling and doing a more extensive review in what it is that you're looking at?
So I will be honest, I've only started my real journaling process in the last like month or so. I think that my results would have been,
Wow.
yeah, I think that my results would have been a lot better if I started journal, or I would have adapted a lot faster if I started journaling a long time ago.
Yeah.
That's not to say I didn't review though. Like at the end of each trading day for me, I generally only trade from the open till about 11:30. And if I come back to the market, it's at 2:30, 3 o'clock, but that really doesn't happen very often because, I also have a day job. But what I would do is at around 11:30, I would actually look at the trades that I had and like take mental notes, like, out of the 5 trades I took today, 3 of them got stopped out by a point. Maybe tomorrow I'll make my stop size a little bit bigger. Maybe 3 points is just not enough, and 4 points is the new 3. Or maybe I'll look at where my targets were versus like it got to 2 points just under my target versus like my target. Maybe I should have just taken that off. So I was doing reviews at the end of the day and taking mental notes, but I think that if I would have written them down, I would have been able to see that I was seeing the same things over and over and over again, and probably adapted a lot quicker.
Yeah, it would have cut down your trial and error time there.
Yeah, for sure.
Which is like, yeah, I get that. I think like journaling's a very tedious thing, but realistically, it's very, very is the most effective thing to kind of hone in on the mistakes that you're making or the things that you're doing well and really emphasize those. And which is interesting to me because I think with the development of your strategy and yourself, I would have guessed at least that, yeah, you do your review, which is, I'm not going to completely shame you on that. Obviously, like you're looking at like things that you've done in the past and trying to tweak them. But I don't know. I thought that you'd have more of a process. And now that you've been journaling, how do you find that? Do you think it's kind of expediting a little more of your learning curve and what you got going on?
100%. I think the one benefit of journaling that it was almost immediate was I found myself being more patient, because the most common thing that I was saying in my first like 2 weeks of journaling was like, the perfect entry was 5 minutes later. The perfect entry was 2 minutes later.
Yeah.
And I took on too much risk too early, where I could have had exponentially less risk if I just waited just a little bit longer.
Yeah.
So I found that way more patient because I'm seeing my mistakes, written down in front of me and kind of keeping myself accountable.
Speaking of risk and like progress, I want to talk to you about one of the biggest developments, I would say, in the trading world, and we've had a little bit of a scandal here today in the news world in terms of trading. But I know that you've been trading props for a bit, and you've been doing pretty well with those props, and you have much, much more experience than I'd say like the average newer trader when it comes to props, including myself even. I've only had experience with like 2 of them. They've been okay, but I really want to get your kind of understanding and breakdown of your opinion on funding to begin with, and then kind of going into props. So you started trading like a while ago. Obviously, at that point, props weren't that big of a thing, right? It wasn't that popular of a way to get your funding. But over the past like 2 years, year to two, right? About year to two, funding from props has become extremely popular. And I kind of want to get your thoughts on funding with your own capital versus the props, and like what differences that you've experienced. Do you trade both of them now, or do you solely trade one of them? Just kind of a breakdown of where your head's at with all that stuff.
Sure. So I will say props are great, but you have to know what you're getting yourself into when you're trading a prop, because in reality, trading a prop account is harder than trading a cash account, in my opinion.
I've said that so many times. I'm glad you agree.
Yeah. I mean, the amount that this trailing drawdown, which every prop has, whether it's end of day or intraday, plays with your emotions is ridiculous. And there's also this idea of like, you think you're trading $100,000 account. And I've been guilty of this too. I'm like trading as if I have $100,000 account, but you don't have $100,000 account. You have a $3,000 account. And you have to trade that accordingly. Now there's a difference between the evaluation phase and the cash phase, but you can probably be more aggressive on the cash phase. But once you get to that, on the evaluation phase, once you get to that cash phase, you need to, reduce your risk significantly, because that trailing drawdown is going to get, and that's how they make money, is through this trailing drawdown. If there was no trailing drawdown, it would be an unprofitable business. That being said, I think prop firms are an amazing learning tool. You can get a 25K Apex account with the mentality of trading real money for like, what, $25, something like that.
Something like that.
And you're risking, in reality, $25 to learn how to trade with real money. So I think that is like the best way to learn how to trade, versus putting your real capital at risk and paying, the tuition fee that most of us had to pay pre-prop firm. That being said, I don't trade cash accounts anymore. I had to make a personal financial decision to buy a house for my family, so I had to liquidate my cash account.
Well, congratulations.
Yeah. So that was about a year and a half ago. So I've been trading props since then.
Yeah.
I've traded a lot of different props, like 5 different ones at this point. I have a clear-cut go-to, but I'm still testing out some newer ones now. But as to your point, there was some controversy today, and there's reason to diversify and not put all your eggs in one basket.
My first question is, do you find that do you think you make more money trading props or your personal account? What do you think, like? Because it's a good question that I go back and forth with, but I kind of want to get your perception, and I'll speak a little more about it.
So I think that you make more money trading prop accounts. And if you are a consistently profitable trader and you know how to manage your risk, you can make a lot more money on prop accounts. And the reason being is the fact that you can, have 20, if you're on Apex, 20 accounts and sync up the trades and not have to like click back and forth to each different trading account to make the same trades over and over again. And if you trade small enough on one account and just copy it to 20, you can make a lot of money really quickly if you're consistently profitable.
Yeah, I feel like that's fair enough. Like, for you personally, do you think you've been doing better with the props versus when you were trading your cash account? Or
not at first.
Not at first.
Definitely not at first, because, I think I'm one of the, I don't know if I'm lucky or whatever, but the first prop challenge I ever did, I passed. But like, I didn't really understand the rules. So I was trading as if like I just got $100,000 of free money and I can trade. And I quickly, for the first 2 days, it was great. And then the third day, I was like up like $3,000 and I lost like $2,000 of it. And apparently that breaks the trailing intraday drawdown rules. And I was like, what just happened?
Yeah.
Just lost my $100,000 of free money. So then I realized like you can't just like trade willy-nilly on these prop accounts. You have to have severe risk management. Those rules are meant to, they're like tricky. They're meant to like show you that you're supposed to be having good risk, but they also tease like, yeah, you're only supposed to have like $2,500 of drawdown, but you can trade 30 mini contracts at the same time. So
yeah, it's really ridiculous from that standpoint. Like, if you think about it, like there's no way the margin adds up in that sense. But like, realistically, prop accounts, like they are simulated accounts. So like, it's whatever rules they want to put into place, that's gonna be the rules. I think like you made a lot of good points about prop accounts, mainly the learning aspect of prop accounts. Now, I don't necessarily trade props that much myself. I'll do it like here and there, maybe like 20%, 15% of the time. And I do agree, like if you are consistent and your risk management is super tight, I think that they're vastly popular and profitable at that same rate. I just think that it's not the same risk tolerance for your personal account, because if I trade my personal account, if I'm down, let's say like $1,500 on like one trade, I don't have the fear that I have $500 left of drawdown and I'm blown out of this account. You know what I mean? So,
but that's where I'm talking about. You need risk management. If your drawdown is only $2,500, you shouldn't be risking $1,500 per trade.
100%.
You should be risking 100, 50, something small, like
That
that you can live through your worst possible day 3 times and still have money to, like still trade.
that's exactly my point though. Like what I'm trying to say is like when you're trading these props, you have to underscale drastically compared to what they give you as a max lot size or whatever it is if you want to do this consistently. Because that's the thing. Like this is the good and the bad of the prop world, right? Like if you're consistent, I think that if you're consistent, diligent, and you're able to just like take your loss when you have a loss and just step on the wins and take your wins when you have the wins, you can do fairly well. However, the gambling aspect of it kicks in because you're like, fuck, whatever, it's $30, $50 for this account, like I'm down like quote unquote, let's say $2,000 on it. Like, let me just YOLO the rest of this. And worst case scenario, I pay $30, but you pay $30 100 times over. Like it's gonna start being some real money at that point. So I think like you have to really, really be diligent about these things. And like you said, your approach to it is sizing down drastically. So I think that's something that people can take and kind of run with. And I think that's the main way to actually trade props. If you're going to trade them consistently and profitably, like you've been doing over the past like 6 months or year or whenever it was since you moved over, you kind of just want to do it step by step. Because at the beginning, obviously, I think you should make the mistakes. I think that you should learn from those mistakes and understand, because like no matter how many times someone tells you something, you're probably not going to do it until you do it yourself and you feel the repercussions. But these are good warning signs overall. Like treat it as if like it's only like a 3K account, like how much could you realistically risk and like survive a week, let's say.
I can give you some math. I mean, think about it this way. If you have one account that has a $1,500 drawdown and you trade one micro for a 3-point stop, that's $15 per trade. Now with something like Apex, not all of them allow you to trade 20 accounts, but like let's say you did have 20 accounts, you still can do $15 per trade times 20. Now you're trading 2 minis.
Yeah.
But, and you can make a lot of good money with 2 minis, but you have to know that you have to do it on 1 micro per account so you don't like even get near that drawdown. And it's going to be slow till you get to that profit target, but, eventually that's a big payout.
That's the biggest thing, man. Like I think people look at props and they're like, get rich quick schemes, quote unquote, right? Like we saw that. I don't know how, if I'll get in trouble if we're talking about this or whatever, or I highly doubt I'll get in trouble, but like FTT, right? Like fast track trading, like fuck it, let's just talk about it. Like fast track trading, right? This was the first, or maybe not, let me not throw myself under the bus. I don't know if it was the first, but it was one of the first props that like completely bypassed the evaluation stage, right? That's why it was super, super popular. So a lot of people are buying these accounts. They're one-time fee accounts. So it's like $500 or something to get access to pretty much starting to make money right away. Now, you obviously have some rules to reach before you start being able to pull money out. But these types of scenarios where you're looking at this from the perspective of like, okay, shit, if I get 20 accounts that are like they bypass the funding stage, they're bypass the evaluation, you're straight to funding, you're straight to like capital that you can eventually pull out of. If I get 20 of these accounts, right, and I juice them up in the first week, right, I'll be making like 30K a week, right? This is how people think about like the mentality. This is the mentality behind the props, and it's just like instant gratification, which I think is a completely wrong approach. Now, look at what happened, right? When you have these types of instant gratification type accounts or companies that promote something like that, they now have these massive solvency issues. You can't find the CEO anywhere. This guy's deleted all of his social media. And like now you're everyone, you have like 4,000 people, 2,000, I don't know what the number is, but you have like thousands of people that are looking for thousands of dollars that theoretically belong to them based on what's going on. So like, I'm not saying it's the trader's fault, not at all, right? It's the fault of obviously the company, but the promotion of this instant gratification and just like gamble mentality with these props breeds these kinds of firms, and it attracts those types of traders, which end of day, right, end up gambling realistically. Like when I trade props, I don't even like really think about the payouts until it's like deeper into it, right? I'm just going step by step. If there's trades in the afternoon, I'm done trading my personal account, why not? Like just build it up slowly. If I haven't requested a payout in like 3 months, it's because I'm not trying to break the bank with these accounts. Like if I'm trading 50K accounts, for example, like I'll be risking maybe like $100, $200 per trade. Mm-hmm. And like, that's kind of my general target profit on the day for those accounts. And I'm not trading 20 of them either. Like I've got a few different ones, but like I'll just try to hit the base hits, collect like 100, 200, $300 per account on a daily basis if the opportunity's there, and then whatever happens, because some days realistically I'm not going to trade them if the opportunity's not there. I'm just going to leave those aside. So if I trade them twice a week, like I'm not going to be getting payouts every month. You know what I mean?
No, but it's an extra side income that you could work in and not have to worry about, trading it off your cash account.
Yeah, exactly. And I think like people need to kind of accept the fact that if you're aiming for, let's say, like a payout a month, that I think that's reasonable. But if you're aiming to like get paid out every freaking day, just hitting these like massive home runs, it's just you're putting a lot of pressure on yourself for instant gratification when you can just like take it slowly and focus on actually what is going to work in your trading.
Yeah. So I will say I'm very fortunate that I don't have to rely on the income from this trading. So I actually don't have zero expectation about when I get a payout. I take my payouts when I hit certain targets in the account size.
Yeah.
And mostly it's just to take off risk, so I don't give it all back.
Yeah, exactly.
If I all of a sudden have like $10,000 in profit, I can unfortunately have that mentality where like, oh, I can triple my risk size now because I have a padding, and that's not what I learned that the hard way, and that's not what you should be doing. So whenever my account size get to a certain amount, whether it's 1 month, 1 week, 2 months, 3 months, whatever it is, that's when I take out money.
Yeah, so you're trying to mainly just hit the dollar figure in the account, and then you start taking money out of those accounts, like in terms of your payouts. Yeah. So I think that's like a fairly reasonable approach too, because like you like I think the more you force things, the harder it becomes, especially when you're dealing with like trading and money. Like if you're like, I need to make this back, or I need to make X amount of dollars, like you take all of your brain power away from the trading strategy in the system, and you start focusing on the things that are like, yeah, of course they matter, but like you're putting way too much pressure on something that like is so behind your risk management, your trading rules, your strategy, the way that you execute, that like you bring it so to the forefront that like it just completely clouds the rest of your judgment. So with these props, right, there's a lot of talk about which firms are good, which firms are this, which firms are that. You said that you've kind of spread your risk and you've been using a few of them. Which do you find? Number one, it might not even be relevant to the prop, right? But sometimes people trade better in some props than others, right? Do you have a situation like that where you notice that you might do better in one than the other?
I tend to do better in the accounts that have the largest trailing drawdown.
Okay.
So like and I'll say this, like every prop has its place. And I can go through a couple that I've used. Apex has its place because it's cheap. It's the best learning tool. Like if you want to learn how to trade, if you're not consistently profitable, go to Apex. Buy their $20 evaluation or whatever their sale is right now. I got payouts from Apex. They work. They're a fine company.
Yeah.
If you want the most overall reliable one, tried and true over time, I'm probably going to say Top Step. Top Step is going to be more expensive than than Apex, but I'm very confident that Top Step is not going anywhere.
Yeah.
And then I've tried a couple of others here and there. I'm currently trying this other one that is also straight to funded, but I only have one account. I'm really just seeing to see if I can get to the payout and see if I actually get my money first before I give it a recommendation. But Tradeify, for example, is the other one I'm working on. But so far no problems with them. But every prop has its place because they all have different rules depending on what your strategy or what your plan is. Some of these props have an end of day drawdown. Some of these props have an intraday drawdown. Some people prefer the end of day drawdown, but it comes with other drawbacks. So it really depends on your style of trading or which prop firm is going to be right for you.
That's good. One of the main not a main question, but like one of the questions I had on a single day per account, what has been your biggest gain? And there's a reason why I asked this. And obviously it is in relation to the account size, but like what has been like the most monumental day that you've had in these props?
It's funny you said it was probably 2 weeks ago.
No way, nice.
Yeah, it was 2 weeks ago. I had and it was funny. I posted it in chat. It was 1,100 point day per account. I think on NQ.
Oh shit.
On the micros, not on.
Yeah. Which like still that's like you're looking at like $2,200 on like per account, which I think is like that's pretty big. And the reason why I asked is because like okay, so I don't know how much you're on social media, but
None at all.
exactly. So $2,000 days, like great, that's fantastic. When you see shit on social media of people posting 30, 40, $50,000 days in these props per account, right? That's not cumulative. Because like if you have 20 accounts, yeah, that's a massive day, even if you make like $500, right? But I'm talking about per account. Now, the reason why I ask you this question is because when you have a $2,000 day, $3,000 day, that is very reasonable for you to get paid out because of the consistency rule, right? Because realistically, like if you have, let's say you're waiting for like 10 grand in the account before you start pulling money out, if your biggest day is like 3 grand, it doesn't breach that rule. But the things that you see, all these like, I guess like smoke and mirrors where people have like $60,000 days, $40,000 days per account, you got to think to yourself, in these real accounts, like if you can do that, just do it in a real account, because in a prop account, you're never going to see that money. Because that you have to make, like, let's say you make like 40K in one single day, you have to have at least 80 grand of gains in that single account to be able to pull any of that money out because of the consistency rule. So that's another huge factor that people, I think, overlook. Like, yeah, okay, everyone's super greedy and like trying to like jump into these props, so you have to understand all of the freaking rules.
Yeah, and that's a relative, not a new rule, but it's been getting most of these prop firms have been raising that percentage or lowering that percentage to make it harder and harder and harder for you to take withdrawals from these accounts, because they don't want you to have those $30,000 days. They want you to have like 500, 500, 500, 500, so that you can withdraw your like smaller. It allows them to stay solvent, and maybe that's what happened to FTT. I don't know.
Yeah. We can keep guessing, but we'll never know, I feel. But like, yeah, so I think like there's a lot of potential out there, especially when it comes to funding, when it comes to different strategies, when it comes to adaptability. But all in all, like I think the main learning lesson from our chat here, which is kind of what I was getting at, is if you truly want to build out like consistency and actual profitability and have gains week in, week out, month in, month out, you're going to have to add a twist to your trading and your trading style. Would you say that like one of the key factors to your consistency has been taking that information, but actually making it your own realistically?
100%. And you know, each prop firm has even shaped some of my trading too. So like these intraday drawdowns, you can't just like put on a position and VSA, you know, where you know, you can't hold it for 10 hours, let it go up 100 points and then come back down, because that one trade could blow up your account. So like,
for sure.
But yes, you know, making my trading plan my own has been, you know, a process over the last, you know, I'll say my real trading journey started when I learned auction market theory, but the 2.5 years, you know, making it my own has been extremely helpful in keeping me as consistent as possible, profitable.
What would you say your turning point has been towards profitability? The main one takeaway that you would tell yourself like 2.5 years ago, do this sooner.
It's difficult because, you know, 2.5 years ago, I would have told myself to look at replay of the Dom more.
So right now, you're right now. So
yeah. So right now, I would have probably told myself to get rid of the noise, and by noise, I probably think it would have been volume profile and what's it called? Overnight price action.
Okay, interesting.
Because it's just, those volume profile is just too subjective for me, for my style. I'm not saying it's not useful. It's a very useful tool. I use it, you know, for intraday analysis to help with my decision making. But as far as like a 50-day look back, for me, the reading of the volume profile was like too subjective, and I needed something more like hard lined, like this is where the TPO stops.
Okay.
And like that is where my level is.
Interesting. So getting rid of the noise, I think that's like a huge factor. I think everyone should take that into consideration, right? Like less is more, especially when it comes to trading. Like the more you add on to it, the more you actually make it rocket science, which is like completely the opposite of what we're trying to do realistically. So I like the fact of simplicity. I like the fact that you're making it your own. I like the fact that you're exploring, right, different props and trying to stick to the ones that have worked with you. Now, pretty much the final question that I have right now is anyone checking out TradePro Academy or trying to see what's going on with us, what would you tell someone looking into TradePro Academy would be, I guess, your number one recommendation to actually succeed with us? Because we have a lot of information. However, that doesn't guarantee a trader's success, right? Like, for example, you've taken a lot of information, created something more malleable that works for you. So what would you say advice-wise to anyone that's checking out TradePro Academy? What would you tell them to kind of do to get the best head start with their trading journey?
Sure. So if they're looking specifically into TradePro Academy, the strategy works. Auction market theory works. It's, proven. Tons of traders use auction market theory. The strategy works. What I would say to a new trader to TPA is don't try and incorporate every aspect of TPA on day one. Try and master one thing at a time, because trading is hard, and each individual skill behind trading is very hard in itself. So finding a good entry is hard. Finding a good place to put your stop is hard. Finding the perfect place to put your target is probably the hardest thing that I still am working on that. Yeah. So trade management is hard. So start working on one aspect. Maybe start with your entries, and find your entries using auction market theory, and having a set target, no matter what it is. It could be 5 points, 4 points, 6 points, whatever it is. Just make sure that you're on the right side of trades. Then once you've mastered that, move on to the next skill. Maybe trying to find a way to make your risk smaller by shortening your stop, or maybe it's the opposite. Maybe your win percentage is too low to keep you profitable, so you need to widen your stop. So working on one thing at a time will get you to where you want to be faster, because if you try and master all, let's say 15 skills that it takes to be a trader, or using the TradePro Academy plan, like you're going to fall short on all 15 skills rather than, master one at a time.
Yeah, I couldn't have said it better myself, realistically. The goal at the end of the day is to take the information that we have and see what your personality resonates with, and then focus on that. Now, I'm obviously going to say start off with auction theory, start off with the profiles, whether it's a market profile or a volume profile. I think everyone should understand that. But there are bits and pieces and nuances that I think that traders really need to understand about themselves and the way that they trade before they start adding other aspects into it, which I think that's pretty much what you stand for as a trader based on our conversation here. It's very evident that you've taken information, but you've done what a lot of people either refuse to do or don't think of doing, and that's creating some kind of path of trial and error to get to that area of consistency, that area of profitability, that area of having something concrete that you have confidence in. So I really appreciate that, and I appreciate you coming on here at TradePro Academy. It may seem that we're ending it abruptly, but I feel like we've had enough conversation. We've got Jerome Powell in the Federal Reserve to take a look at in about like 50 minutes time, or no, 30 minutes time or so. So I think we're going to go and jump into that. Now, Mike, I really appreciate you coming on. Thank you for shedding some light on your strategy and having this conversation with me, and I'm sure that everyone listening really appreciates it as well. And if you have any final thoughts, let us know. Anything you want to say here?
Yeah, don't trade Fed Day. That would be my final thoughts.
The day of Fed Day, don't trade Fed Day. Honestly, I couldn't agree with you more. Like, I don't too much with it because it's a zoo out there.
Yeah. I think over the last like 5 or 6 Fed days have just been like usually my biggest red day of the month. So like I just don't do it anymore. Or I don't trade the 2 o'clock time at least.
You're right. Like, market conditions have changed and so have news events. So let's see.
Yeah. Good luck to you though.
Appreciate it.
No problem.